Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that's been generating a lot of buzz in the crypto world, the latest XRP burn. If you're holding XRP, or even if you're just curious about the mechanics behind one of the most talked about cryptocurrencies, you're going to want to stick around for this. We've seen headlines about millions of XRP tokens being permanently removed from circulation. But what exactly does an XRP burn mean? Is it a bullish signal, a non-event? And how does it impact the future of your investment? We'll break down the technicalities, analyze the data, and give you a clear picture of what's really happening with XRP's supply. So hit that like button, subscribe if you haven't already, and let's get started. Understanding XRP burn. First, let's demystify the concept of XRP burn. Unlike some cryptocurrencies that have scheduled token burns or buyback and burn programs, XRP's burning mechanism is intrinsic to the XRP Ledger, or XRPL. It's a fundamental part of how the network operates. Every single transaction that occurs on the XRP Ledger incurs a small fee. This isn't a fee that goes into someone's pocket or to validators or miners. Instead, this fee is permanently destroyed or burned. This mechanism serves a crucial purpose: to protect the network from spam and denial of service attacks. By requiring a small amount of XRP to be destroyed for each transaction, it becomes economically unfeasible for malicious actors to flood the network with junk transactions. Think of it like this. If sending a transaction cost nothing, someone could easily overload the system. But by attaching a small, irreversible cost, the network remains efficient and secure. The minimum transaction cost for a standard transaction is incredibly small, just 0.00001 XRP, also known as 10 drops. While this might seem insignificant on its own, these small burns add up over millions of transactions. This makes XRP inherently deflationary. Over time, the total supply of XRP in circulation is gradually reduced. It's a subtle but continuous process that differentiates XRP from many other digital assets. The latest numbers: how much has been burned? So, what are the latest figures? According to data from XRP Scan, the leading explorer for the XRP Ledger, the total amount of XRP burned has now surpassed a significant milestone. Over 14 million XRP tokens have been permanently removed from circulation. This isn't a one-time event. It's an ongoing process that reflects the continuous activity on the XRP Ledger. To put that into perspective, while 14 million XRP might sound like a lot, it's still a relatively small fraction of the total XRP supply. However, the rate of burning is directly tied to network usage. The more transactions that occur on the XRPL, the more XRP gets burned. This includes not just standard XRP transactions, but also interactions with new features like automated market makers, or AMMs, which burn 2 XRP for every new AMM pool created. Recent reports indicate a notable surge in the XRP burn rate. For instance, in Q1 2024, the total XRP burned for fees increased by a staggering 101% compared to Q4 2023. This isn't just a random fluctuation, it's a clear indicator of growing on-chain activity and increased utility of the XRP Ledger. This surge suggests that more people and institutions are actively using the XRPL for various purposes, leading to a higher volume of transactions and, consequently, more XRP being burned. Market impact: deflationary or negligible? Now, for the million-dollar question, what does this XRP burn mean for the market? And more importantly, for the price of XRP? The concept of burning tokens often leads to discussions about deflationary pressure and potential price appreciation. In theory, a reduced supply, coupled with constant or increasing demand, should lead to higher prices. And yes, the XRP burn mechanism does introduce a deflationary aspect to the asset. It's a slow, steady reduction in the overall supply. However, it's crucial to understand the scale of this deflation. As Ripple CTO David Schwartz has pointed out, even with massive transaction volumes, imagine if global payment systems like SWIFT, Visa, and MasterCard were all running on the XRPL, processing billions of transactions daily. The annual burn would still only account for a tiny fraction, roughly 0.0075% of XRP's total supply. This means that while the supply is indeed being reduced, the decrease happens at such a slow rate that its immediate impact on XRP's overall supply, and thus its price, is considered negligible in the short term. So if the immediate impact on price is minimal, why is the burn mechanism so important? It's about long-term sustainability and network health. The burn mechanism ensures the XRPL remains efficient and secure by deterring spam. It's a fundamental part of the network's economic model, designed to support its long-term viability as a reliable payment network. This consistent burning, even in small amounts, reinforces the value proposition of XRP as a utility token within a robust and secure ecosystem. Expert opinions and future outlook. What do the experts say about the XRP burn and its implications? Generally, analysts agree that while the burn mechanism is a positive aspect for XRP's long-term tokenomics and network health, its immediate impact on price is limited. The primary driver for XRP's value remains its utility, adoption by financial institutions, and the broader regulatory environment. The recent surge in burn rates, driven by increased network activity and new features like AMMs, is seen as a positive sign of growing utility and organic usage of the XRPL. It indicates that the network is being actively used for its intended purpose, which is a far more significant factor for long-term value than the direct deflationary effect of the burn itself. Looking ahead, the XRP burn will continue as long as transactions occur on the XRPL. As the ecosystem expands and more use cases emerge, we can expect the burn rate to continue its upward trend. This gradual reduction in supply, combined with increasing demand from real-world utility, could contribute to XRP's value proposition over the long haul. It's a testament to the thoughtful design of the XRP Ledger, prioritizing network integrity and efficiency. Recently, a prominent market analyst by the name of XRP Crypto provided an explanation as to why he feels that the price of XRP is on pace to reach double digits. In his most recent price study, he brought attention to a pattern that was identified during the market run that occurred in 2020-2021. This pattern finally resulted in a further rally that reached the high of $1.96 in the middle of 2021. It was claimed by XRP that this trend is reproducing itself in the present cycle, and they predicted that there is a possibility of an increase to $17.5. To be more specific, this pattern is characterized by the interaction of XRP with the exponential moving average EMA that is 21 weeks long. This EMA has, over the course of the years, served either as resistance or support, depending on the pattern that is currently prevailing in the market. The historical data suggests that XRP fell below the 21-week exponential moving average, EMA, in the beginning of the year 2020. It eventually reached a cycle low of 0.1140 in March 2020, which occurred in the midst of a steady price slide. As a consequence of the depreciation below the 21-week exponential moving average, EMA, this moving average became a barrier, which prevented XRP from breaking over for a period of 19 weeks. The resistance was eventually overcome by XRP, which occurred toward the end of July 2020. Following the breakout, the price increase continued for a few months, with XRP reaching a high of $0.79 by November 2020. This indicates that the price has continued to rise. When compared to the low of $0.1140 established in March of 2020, this peak represents a 592% rise. Despite this, the obstacle that occurred at the top price of 79 cents caused a pullback, and XRP went into a phase of consolidation that lasted for several weeks thereafter. Throughout this phase of consolidation, XRP repeatedly tested the 21 exponential moving average, using it as a support level.